I think it's totally normal cycle as it looks like. So now it's up to gold again to start the next leg up at some point, and then silver will follow until you are way into the next run up, and then silver will show up again and do its own thing. And in the bigger scheme, maybe we need another two or three of those kind of minor cycles. And in the large cycle, at the end, silver will have 1 year in the sun where it's doing constantly its own thing, and it will probably break above $50, go to 100, 200, who knows? Definitely, I think we're going to see three-digit silver at some point. If you do the final calculation at the end of the bull market, you will find out, wow, silver outperformed gold by 2 or 3.
The precious metals market is enthusiastic as silver approaches the $30.50 mark. This upward movement, fueled by a weakening US dollar and overall bullish sentiment in the sector, is capturing the attention of investors and analysts alike. Gold's resilience above $2,350 provides additional support, creating a symbiotic relationship between the two metals. Florian Grummes, founder and CEO of Midas Touch Consulting, offers valuable insights into this dynamic market. Known for his expertise in precious metals and cryptocurrencies, Grummes anticipates that silver could break above $50 and even reach three-digit prices after a few more market cycles. However, he tempers this optimism with a note of caution. The silver market has shown impressive performance, boasting a 26.1% gain year-to-date. This strength is further evidenced by steady net inflows into the iShares Silver Trust, the world's largest silver ETF, which has seen its holdings increase from 12,869 tons in June to 13,586 tons. This trend signals growing investor interest in the metal. Despite this positive outlook, Grummes points out some warning signals. He notes that since the recent peak, silver has experienced a 12% decline, while gold is down 6%. Mining stocks have also seen pullbacks, with regular mining stocks down 12% and junior silver stocks dropping over 15%. Grummes views these fluctuations as part of a normal market cycle, emphasizing the importance of a measured approach to investing in precious metals. Another key indicator to watch is the gold-silver ratio oscillating between 77 and 78. A drop below 77 could push the ratio towards the next support level at 75.75, potentially signaling a bullish trend for silver. While many analysts project a favorable outlook for silver, suggesting it could breach the $30 threshold shortly, investors should approach the market with a balanced perspective. The current market conditions and anticipated strength in silver may present profitable opportunities for long positions. However, as Grummes' analysis reminds us, it's crucial to consider both the potential for significant gains and the reality of market cycles when making investment decisions in the volatile world of precious metals. Tune in to explore Florian Grummes' expert analysis. Take advantage of future content, hit the subscribe button, and turn on notifications to stay in the loop. We appreciate your support.
I think silver will always do what it always does. It is following gold until finally it does its own thing for the last stage of the bull market or of a bull cycle. And that's what we've seen just very recently. In April, finally, silver showed up to the party with its own behavior. It didn't care anymore about what gold was doing. And it broke out above $30, which was a good bullish move. But in the end, where we are now trading slightly below $30 again, I have to tell you, it's not like super impressive what silver has done, right? If you go back to October, we talked already about it, 1810 in gold, there was the start of the rally at 6th of October. Silver started, I think, around $22, something like this. So overall, it gained more than $10, more than 50% in 8 months. That's a massive move. That's a respectable, very good move. That's it. That's fine. But when it shows up and does its own thing like it did in April and May, it's a warning signal from my experience. So, and as we now know, yes, markets have been going nowhere. Silver is down from the top 12% peak to drop. Gold is down 6%. The mining stocks, the normal ones, are 12% down, and the junior silver stocks are down more than 15% already from their top. Not a big thing, but then again, ask the people who bought at the top, probably doesn't feel too well already. I think it's totally normal cycle as it looks like. So now it's up to gold again to start the next leg up at some point, and then silver will follow until you are way into the next run up, and then silver will show up again and do its own thing. And in the bigger scheme, maybe we need another two or three of those kind of minor cycles. And in the large cycle, at the end, silver will have 1 year in the sun where it's doing constantly its own thing, and it will probably break above $50, go to 100, 200, who knows? Definitely, I think we're going to see three-digit silver at some point. But it's going to be driven because the sentiment is super bullish in the market. People have been watching metal prices going up for years. Everybody's believing in it, and then the smaller nominated silver, you can buy 1 ounce is much cheaper than gold. People probably will look like, oh my God, gold now $3,000, $4,000, $5,000, silver only $50. Let me buy silver, and then you're gonna see the little brother catching up and then taking over gold. And then if you do the final calculation at the end of the bull market, you will find out, wow, silver outperformed gold by 2 or 3, and probably that's how it's gonna be this time again as well. It's a byproduct of many other mining procedures and processes. Yes, I know there is not too much physical silver left. Definitely believe it could happen at some point that we get a silver squeeze. People have too much hopes into silver, just should treat it a little bit more rational. I'm a silver bug myself. I can tell you that most of my physical holdings are in silver. It's actually more than half of it is in silver. But I've been accumulating for the last 20 years. And I see the chance in silver going to 3 digits, but as we have learned now, it takes time. It takes much longer than we all anticipated in that sector. Because for some reason, in a fiat money system, the central bankers and the politicians can kick the can down the road for much longer than we all can imagine.
As geopolitical tensions continue to rise, the Shanghai Cooperation Organization is emerging as a significant player in reshaping global alliances. Financial analyst Florian Grummes highlights this development as part of a broader context that he describes as at least a Cold War, if not World War III, with numerous proxy conflicts. China and Russia, the leading forces behind the SCO, are actively working to transform this Eurasian alliance from a regional security bloc into a formidable geopolitical counterweight to Western influence. Their recent leadership summit in Astana, Kazakhstan, underscored this ambition, signaling a concerted effort to create what observers call a vision of an alternative world order. The SCO's membership already includes key players such as Kyrgyzstan, Pakistan, and India, representing a diverse coalition of Eurasian nations. Iran was admitted to the group in a significant move last year, further expanding its reach and influence in the Middle East. Now the organization is poised to welcome Belarus, a crucial European ally of Russia that played a role in the Ukraine invasion, into its fold. This expansion strategy aligns with Grummes' assessment of the current global situation. Let's get back to the interview.
Talking about the gold market, we had this Hamas gap in early October last year. That was the start of the gold rally back then. When gold closed at 1810, I think. No, it was the low was at 1810 on a Friday. It closed at 1829 or something. And then on Monday, it opened up at 1850 because Hamas had invaded Israel. That changed the tone of the gold market immediately. And since then, gold had been rallying up until end of May. And it gained more than $630 within 8 months. So that was a big rally. And just by the way, out of that perspective, you need to consider this thing went up the hill, give it a little bit of a pause and a breather and let it like rest and recharge. You know, if we want to go to $3,000 gold, we want to maybe go at some point to $5,000 gold. You cannot do this in just continuously running up the hill. Yeah, you need to have a break. I think it's totally logical. Coming back to your question, yeah, I think the geopolitical tensions will continue to increase. We have clearly, at best, a Cold War, World War III going on. And we have a lot of proxy conflicts going on. And the situation in the Ukraine is a mess, is complicated, is unfortunately at a level where it's, I think, getting dangerous because the NATO, the Western alliance led by America, has been pushing continuously, refusing any diplomacy, refusing any negotiations. Hundreds of thousands of people have died. The Russians have a clear security interest here. I think that NATO, in the end of the day, is responsible for this conflict, even though the Russian invasion was not correct. But it is understandable that the Russians have security interests close to their border. would be the same if the Chinese suddenly placed their rockets in Mexico in front of America. The Americans would freak out as well. And they did, by the way, in the 1960s with the Cuba Missile Crisis. So we have similarities in the history, and people don't want to listen. I see that the press here in Europe and Germany is very aggressive towards Russia. Of course, the Russian press also is very aggressive. And this is not good. And nobody can lose their face anymore. Huh? The risk for Russia is basically losing everything, because if they give up here, that probably step by step will mean the end of Russia. And for NATO in the West, if the stakes at play are so high now, if they would pull back now, they would also lose their face. And that could also mean the end of the NATO alliance at some point, because people seeing that it's not worthwhile joining that group anymore, because they overplayed their cards, maybe, whatever. So it's very tricky. I hope there's a way out. Right now, the war economy that is going on in many parts of it, like, for example, Germany producing weapons a lot. You see the stocks of weapon manufacturers doing well. That is, of course, somehow stimulating the economy to an extent. And that has also been a little bit inflationary. But I think once the war starts, should it be starting in earnest, and God forbid, I hope this will not happen, but this will not be a good event for the markets.
How might the expanding influence of the Shanghai Cooperation Organization and the ongoing geopolitical tensions affect the precious metals market, particularly silver, in the coming years? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.